Hey everyone, it's Angus here. I thought I'd make a quick video just to show people how I personally look for stocks that are, I guess, going against the trend at the moment. Like the whole stock market is going down, depending on what Trump tweets and, how China reacts and, with all the uncertainty around Brexit and everything else. So I feel that there could be a bit more uncertainty, ahead of us. And so, what I'd like to do is try and move into stocks that might be considered defensive stocks. Typically, those stocks are ones that pay a higher dividend, and some of your stocks like the particularly fast food outlets like McDonald's and Coke and Yum and some of those big brands, supermarket discount brands like Costco and Walmart, and you know they might be a good place to put some of your money at the moment because the biotechs and the technology stocks, which is where I normally trade, will come under quite a lot of pressure. And the other place to put your money is gold. And so you can either choose to put your money into things like ETFs, where you might sort of, say, give me a gold ETF that sort of, goes, with the whole market. So if gold's going up in general, the ETF will go up. You might have a leveraged ETF like UGLD, for example, which goes up. If the price of gold goes up 1%, UGLD, I think it's at three times leverage. That'll go up, 3%. So there's a whole bunch of different strategies that you can apply. But what I thought that I'd do is have a look at what stocks went up on Friday. Like so, when the Australian, I trade in Australia primarily, but I trade both Australian and US shares, and so you can do this same exercise for both or any stock market around the world really. And so I thought what I'll do is I'll have a look to see which shares didn't react and didn't go down along with everything else on Friday. After Trump threatened to raise tariffs to new ones to 10% and the existing ones to 30. So and then China, of course, saying that they're going to introduce tariffs, and the Fed having their opinion, and the whole thing's become a bit chaotic. So I thought I'd look for stocks that might be maybe a little bit safer, stocks that might be going up despite what's happening on the market. And so the way that I do this is very easy. I simply open up my TradingView site, and I like to use something like a Bollinger Band. You can either use moving averages, Bollinger Band, literally every, whatever you like. So, whatever trading tool you like. I like to use moving averages because a bucket load of people use moving averages. Half the market uses moving averages. A lot of the bots use moving averages. There's always signals about, if it breaks down below the 50 or the 100 or the 200, which way a share is going. And so I like to try and find shares that aren't doing anything startling. They're literally just ticking along. So they're just, very quietly doing their own thing. And, you can see the price line very, much follows the, some of the moving averages. I think the more critical one is the 50-day moving average, but it doesn't really matter, which one you use. And so, if I look at the line, you can see it's running fairly parallel, with this particular stock. Obviously has its little ups and downs, but in general, you can see the long-term moving averages are all moving nicely together over the last, couple of months. And so this is a stock that is just an example of what I'm looking for. And you can see that on the Friday hit, yesterday, today's my Saturday. If I go back to candles, you can see that it didn't blink; it just kept going up. So all the news that came out overnight didn't care. And of course, it's primarily because it's a gold stock. And I think that doing this exercise, we're going to find a lot of gold stocks. So I like to look for shares where they're trending up nicely, following a moving average. The moving averages are all sort of moving apart from each other slightly. I like to find stocks where there's positive volume. And so you can see that, I've got my 30-day, average volume line through here. I also like to have an RSI, and RSI simply tells me, whether the stock's at a good value point or whether it's maybe overbought or oversold. The higher that line, the less value is in theory in the stock, but it also means that the stock can continue to run. You can see this one here, it's been, from this point here, here it was arguably oversold, but from this point here, it's been right at the top of this 70 line, and it hasn't really dipped. It had a little bit of hiccup here. I think that was probably at the start of August when the market went down last time. But you can see this was one stock that rallied really well after that August pullback. So I'm not too worried about what the RSI says, but it's just to me as a good indicator of value. If it was low, if the line was down here somewhere and it pointed up sharply like this, then I automatically think that's probably going to be a really good signal that it's going to go up significantly. And then this line here is my OBV, which is just my I've gone blank. OBV, on balance volume. I couldn't think of the acronym. And so again, if the green line is above my 30-day OBV, then again, I think that to me looks like it's a stock where more volume is coming into the stock. And so as long as the green line is moving away from the red line and it's above it, I think that's a good sign. If the RSI is pointing up, I think that's a good sign. If the volume is close to or up around that 30-day moving average, it's a good sign. And again, I like the idea that these moving averages are moving away from each other. And I'll often look at the Bollinger Band, because Bollinger Band is effectively a moving average, or it's just a range around the moving averages, I guess. And so you can see here that this stock is at the top of it, it's above its middle line, and it's been fairly steady all the way through it. And it just sort of tells me here it's kind of trading at the top of the range, but it certainly hasn't gotten too far up. When it breaks out, it does tend to come back a little bit, but it certainly hasn't come down into the bottom area, which to me is a really good sign. So anyway, that's what I look for in a stock. So to show you how I find them, what I do is open up my stock screener, and you can play with this little flag here. So if you're an Australian user, you click on the ASX button. If you're a USA user, you click on the USA button, and you can see for the US stocks, there's roughly, pretend there's around that 9,800 type number of stocks. And if I switch to Australia, it should be a bit over 2,000. And so you can see a little bit over 2,000. And so that you're seeing all the stocks that are available if you've got those sort of two numbers. And so for this exercise, I'm going to focus on the US because I've probably got a little bit more of my money in the US market at the moment. You can see these are the headings that I've got set up, and these are really easy. You can literally right-click and go remove them. You can save them. Make sure that you go save columns as once you've got it set up. And this is just what I like to look at. If I close this down, you can see these are all my columns through here. You can see there's 9,828 stocks, so that's way too many stocks to look at. But this is what I like to look at. I like to look at the sector. It doesn't really matter much, but I like to see what sector the stock's in, because if the sector is going up, then that's obviously a good time to buy a stock. Where if the sector is going down, then that stock is a little bit of an anomaly. So it might be a more cautious trade. The rating doesn't mean a lot, but obviously I prefer to see a strong buy as opposed to a strong sell. And the rating is simply TradingView getting 30 different metrics and trying to work out based on all those metrics which way the stock is likely to head. So it's all about moving averages, and I think there's literally about 30 metrics that it uses to calculate which way it thinks the stock is heading. The last price, obviously want to know what's the last price the stock sold for. The change percent is the percentage the stock has gone up or down for that day, or if it's during the day, then how much up or down it is during the day. I like to know the weekly, the monthly, the 3 monthly, and the yearly performance. I like to find stocks that are that are in an uptrend. So I like to focus on stocks where they've been consistently going up and up and up and up, but they might have had a bit of a pullback. But I want to make sure that during each of these periods, I want to back the winners. So I want to find stocks that are consistently going up through each of these periods. There's no point buying a stock if it was down 50% for the year, but it's had a couple of recent wins. Just the way that I trade. If you're more of a value trader, you might be opposite. You might look for stocks that are a long way down from maybe where they started the year at, and hoping that you're buying them at super low, super cheap prices, and that they're going to rebound and recapture some of these older highs. So different people trade different ways. I like to don't try and guess bottoms. I like to try and work out where the stock's going, and trade along with the with the wisdom of the crowd, so to speak. The other one I like to look at is average volume, and all this one does is, I won't skip over relative volume. So relative volume basically tells you if there's been more people looking, or if there's more of that stock that's been traded, and so it means that more people are interested. So, if a stock's relative volume is, let's say, above 2, then it means that it's trading with much more volume than it has over previous comparable periods of time. The average volume, I just use that to filter out some of the smaller stocks. So I like to see stocks that have traded somewhere between 50,000, 100,000 plus over 90 days, because I want to see the stocks that are really liquid. I want to see the stocks where, people are buying and everyone's interested in. Market cap, I don't really care much about market cap, to be honest. It's just more of a curiosity thing, a little bit like the sector. It just sort of tells me how big the stock is. In volatile times, or where there's nervousness around the market, I like to look at EBITDA. So EBITDA is one of the very few fundamental indicators that I will use or I will look at. The reason why is that I'm a big believer that cash is king. So, if you've got a company that has $1 billion, sort of flowing into its coffers each year, then that's a company that's more likely to survive a long-term downtrend than one who's literally negative $100 million and needs to beg for money or sell more shares to fund their next adventure. So that's why I have these these different columns. You can add as many or as few as you like. If you click on these little 3 dots here, you can see that that's where I get the columns from, and you just tick them to say, please add, please remove, and there's heaps. There must be, I don't know, 100. I've never counted them, but there's heaps. There's heaps and heaps and heaps in there. So these are just the ones that I use, probably 90% of the time, and especially for this particular exercise. So anyway, so now we've sort of talked about what columns I look at. And again, you can look at whatever you like. I'd always say that I'm guessing. Everyone will tell you that they know what they're doing. I'm guessing, and all I'm trying to do is make sure that the odds are in my favour. So I'm just trying to find stocks that are more likely to go up than they are to go down. And so I make sure that my win rate is hopefully slightly higher, and then I protect my downside through using things like I use trailing stop losses. And so again, however you want to trade is up to you, but this is just how I trade, and I'm very happy with my my style. So let me then show you what I do next. So you've got 9,800 stocks. So that's a crazy amount of stocks. There's no way you can go through this many stocks and do any sort of analysis. Just take you forever. Some people might have a crack at it, but thankfully, the best thing about TradingView is that you can sort by all the ones that are strong buy. You can go through those ones first if you wanted to, and just try and make a call on whether you think that stock's going to continue or not. But so what I want to do is I'll start to filter them down. So as I said to you before, I like stocks in this sort of a market that's making a profit. So if the market is more bullish, then and I've got my speculative sort of stocks in play, like my biotechs and my technology stocks, then I don't care if they've got a profit or not, because they're more likely, if they're a discovery type stock, they're more likely not to be making money. And so I leave, I just don't worry about this filter. Again, I have it just for curiosity, but I don't worry about it. But because I'm trying to trade better stocks, I'll keep this filter in for this particular scan. So I'm just going to change it to 0 million, 0 M. And so you can see that my universe has gone from 9,000 down to 4,500, because these are now the stocks that are theoretically making money, or their EBITDA is at least positive. Then market cap I don't care about, as I said before. Average volume, I'm going to change it to 100,000. And what I'm trying to do is get down to roughly about 20 stocks or so. And so you can put in whatever numbers you like, and you can fiddle with it. But you can see that these are now much more liquid type stocks. There's much more volume being traded on a daily basis with these stocks. Relative volume, I don't worry about putting in a figure, but I can already see that these ones here, for example, have had more volume coming through. And as you can see here, that they're recommended as strong buys. So the next one that I want to fiddle with is yearly performance. And I might go, well, one of the things to do is I could easily go and just click on it. Sometimes I do this. I'll just move this up a bit. Sometimes what I'll do is I'll say, based on the number of shares that I've got left, at what level will it knock me out? You can see that if I scroll down, there's heaps and heaps and heaps and heaps of stocks. And so what I might do is I might say, well, let's make this 50. So I'm only going to look for stocks that are up 50% for the year. So I'm going to go above. If I'm looking at the Australian market, I'll mainly use the number around between 20 and 30 for them, for example, just to see as many as I knock out. You can see here that I'm down to 125. And so for the 3 months, I'll sort by 3 months, and I'll have a quick look at the 3 months and see how many stocks I would knock out depending on what I filter down to. So there's heaps and heaps and heaps of companies here, that are all above that 20 mark, let's say. So if I went back up here and I said, show me all the stocks that are above 20%, above 20. Let's see what that looks like. So I'm down to 73 monthly. I'm going to, take a punt, and I'll say, let's put in, I'm using below, I need to say above, in fact. Let's go above, sorry about that, above 10. Yeah, so I've got above 10, so I'm down to 38, so I'm getting closer. And so for weekly, I might say, well, let's put weekly saying above, because we've, had a bit of turmoil, so let's just say 0 and see what happens. So I'm down to 28. I'm going to say for change, because I'm looking for stocks that went up on the day, so you can see Phase is actually a stock that I quite like, and I'm pretty sure I still hold it. But I'm going to say let's make that above 0, because I'm looking for stocks that went up on Friday. Like I want ones that have gone against the trend. I'd argue that, if I, let me just get rid of that, and I'll just sort it by change, because anything that's only gone down like 1% or so, that stock's held up fairly well. So you can see that, some of these like Paysign, Pod's another one that I've had my eye on. You can see that some of these stocks, Shake Shack's another good one that I think is probably another good one to trade during these sort of periods. So some of these stocks aren't too bad, but again, I've got 28. So just for the sake of trying to pick the strongest stocks, I'm going to make it above 0. So put it above 0. And so this is now, these are now all green stocks, and I'm down to 16 stocks, so that's not too bad. So what I'm going to do now is I'm going to sort by EBITDA, because I want to see which of the stocks that, the really big boys, see this company here, it's, only up by 164K, so that's not a lot. But if I sort by EBITDA, then all of a sudden I'm looking at, stocks that, it made, it was up 3 billion last year, its EBITDA was 3 billion. SBE BAC, 1.28 billion. So they're, up crazy money, which is really good. The only other filter that I might add is see how, SBAC is $260.80. I've got this funny idea in my head, whether it's, correct or not, but I always think that it's much easier for a stock to go from $20 to $40, and double in price, than it is one to go from $260 to, $520, in that same sort of, short period of time. Stocks can certainly double, when they're, much more expensive. But it would be interesting. I think I'm more likely to get quick wins when I, buy stocks that maybe around that $20 type mark, ish. I just think they're more likely to do a bit better. And when I look through this list, it's quite interesting that, almost all of these are gold stocks, and so that kind of makes sense. In a downturn, people do tend to move into things like gold. So it is really interesting that I think every one of these, there's a couple of silver stocks, but you can see, another silver stock, but everyone's basically moved into gold or gold is the sector that's moved up the most on the Friday, or it's held its head above water. And you can see, the relative volume is all up. So, a lot of the smart money, or what I think of as the smart money, from institutional type investors, is all moved across into gold because the volumes are all up, which, makes it quite interesting. So just because I don't want to buy all gold stocks, I might go and get rid of this change above. I might make it back to nothing. So I might bring back in some of those other tech stocks and things. Yeah, so see, I've got Luna, I've got, some of these other stocks that I know, like Phase, Pod. Healthcare is sometimes fairly resilient. And so again, what I want to do is I want to sort by EBITDA, because I want to go through the most profitable ones first. And I'm going to shrink this back down, and I'm going to open up my watch list. So I've just got a watch list. I've literally called it blank. But let's say I make a new watch list, and I call it create new list, and I'll say I'm just going to call it resilient. I'll just call it watch Friday, something like that. And so all I'm going to do is click on the first one, and so you can see that when I look at that stock, and I'll go out and I want to, I like to sort of see what it looked like for the year overall, but it's really the last 3 months that I'm primarily interested in. And you can see over a year, this stock is, it's trended sideways. But at the end of May, it has been ticking up quite nicely. So if I switch back to my 3-month view, 3-month day view, there's one of my niggles with the system. So let's go to say, I don't know, what are we in August? So if I have a look at a view like this, roughly, I can see that it's not doing anything crazy. Like it hasn't spiked up, it hasn't jumped on news, it hasn't done anything crazy. So if I switch to my moving average type view, you can see that, they're all running quite nicely together. you can see that, this little indicator here is starting to point up. This one's been right at the top for a while, but it hasn't sort of made it collapse in the past. And good volumes coming through. So this particular stock, Barrick Gold, I kind of like the look of that. I'm not sure if this will work up when I'm not sure if this will pop up when I click on it, but what you can do is you can scroll down here. If you click on more, hopefully this will pop up here, and you can see here the indicators. This is this consensus of all these oscillators, all these moving averages. See how it's saying these are sells, buys, sells. These ones are all indicating it's a buy. Pivot points and things like that. But all these little dials are is just a visual indicator as to how the stock may or may not be going. And I'll sometimes drop down to a 15-minute one just to see what the shorter range is also suggesting. So you can sort of do a bit of confirmation between the different time periods. If I look at it over 1 week, it's saying it's a strong buy. So I typically like to look at it over a day. And so again, this is a stock that I like the look of. I can scroll down. I can click on this next more. And again, if this is showing up in the screen capturing program, it'll be brilliant if it is. Apologies if it's not, but you can see here it says, the company's, a little pop-up called Barrick Gold Corporation. Tells you what it is, tells you what it does, engage in production sale of gold and copper, related activities, tells you, where it's operating out of, between Chile and Argentina, number of producing gold mines. So it's always good to find something who's producing. Market cap's $32 billion. Things like its EBITDA is $3 billion, gross profit 518, last year revenue $7 billion, free cash flow $101 million. So to me, my very basic look at this stock kind of looks like it's probably going to be a fairly good stock. So all I do now is I right click and I go add to watch list. And so that'll put it over here in my watch list. And then I'll go through these other ones a little bit more quickly, but I just sort of wanted to show you, this is literally all I do. Next one is SBAC, which is a financial stock. You can see the green line's above the red line. The the RSI is probably overextended. It's right up here. It's had, even though the price has in theory gone up, you can see there's a little red candle there. So, it seems to be very much flattening through here. But what I'll do is I'll right click and I'll go add to watch list. So I'm a little less interested in this one, but and especially because it's also that $260 one. So I think there's enough stocks. I'll get rid of it. I won't worry about him for now. And of course, he'll probably be the one that goes up 20% tomorrow, but we'll leave him out of it for now. So you can see on this one, it's a little bit more volatile. So it has been going up and down a little bit more, but you can see here, see how the line's pointing a little bit up a bit more, and it's not at that 70 mark yet. The volume is much more positive. The little green line's about to break out and go up. And so when I look at this, I think this one's got more momentum than this previous one that we looked at. So it's a little bit more volatile, but it does seem like it's going to probably push up a little bit harder. And so if I click on my Bollinger Band just to see where it is in that range, so it's near the middle line. So I kind of look at this and think, well, it's got more upside. If I wanted to be slightly cleverer, I can click on it, I can find my horizontal ray, and I can say, well, let's pretend that that's kind of where it failed before. It sort of got up to this area here. And remembering that, these resistance areas are always an area as opposed to a line, no matter how we draw them, they really are an area. So you can see that the stock sort of got up to that, fell back down, got up, fell back down, and now it's pushing up to it again. And it might break out because it's got a lot more volume behind it this time. You can see that, it's got quite encouraging volume here. There was just a nothing candle there, but this is, fairly solid candle. The whole market's heading that way. I'll often scroll back out just to see what it's done in the past. So it looks like, here we go. There's some stuff around here. And so, it has been up, to that $6, 60 type, or I don't know what it was, $6.50 type mark. So to me, I look at this stock and I think, well, there's a little bit more in it. It has been higher in the past and it looks like it might continue. So I'll right click on that and I'll go add to my watch list. So GFI will pop up there. AU, again, nice left to right. Have a look at my moving averages. This one's pointing up. This one's pointing up. This one's, roughly in the right area. Nice and consistent. So, that one's definitely one that I'd be interested in trading. So I'd go add alert. Go add to watch list. You can see it was up 4% on the Friday. But see how it's just got this very nice, sort of parallel, moving averages that, a lot of people look at. Some people will say it's overextended, it's already run too hard, too fast, but I'm not I think a stock can never make too many highs. They have to all start somewhere. I kind of like a stock like this where it has gone to a new high and then it's pulled back, and then on the resumption of the trade, then you can get back into it. So this one's gone up quite a bit on that Friday trade. You can see my green line's bouncing up, this line's pointing up, this one's going up. So again, this would be one that I'd happily watch. So if I go add to watch list, AEM, again, same deal, nice lines, everything's pointing up. Okay, add to watch list. Again, same deal. Good volume. Might be a little overextended, because it's broken above that sort of 70 area. And a lot of people sort of will say that if a stock's above 70, then it might pull back. You can see that when it broke above 70 here, it sort of went sideways for a little bit, came back down to a better value area, but it has been running along the top of its sort of 70 mark on the RSI for a while. But you can see there's good divergence here with the volume, so more volume does seem to be coming to that stock, and you can see 1.42 relative volume. So there's a bit more in it. So I'll go add to watch list. I should go Alt W. Royal Gold, same, looks good. Add to watch list. I forgot to press Alt W. This is a financial company, so kind of interesting, but I don't really like what I see in the volume, this sort of area here, quite as much. And for whatever reason, it's come up in my scan, but it's it was actually down. So I'm not overly excited by that. It's up 100% for the year. But it did have a red candle at the end, so I think I'll pass on that one. Oh no, that's right. I got rid of the indicator saying show me things below 0. That's why he's there. AGY again, it's sort of come down, 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 down. Looks like volume's come through. Looks like this green line hasn't crossed above the red line. So again, I'll add this to my watch list if I can remember. Is it Alt W? No, bugger. That could be bad. Yeah, no, it's Alt W, but I don't know what this is bringing up here. Could be anything. Could be bad. I don't know what that was. PVG again, had a big breakout on Friday, so that's one worth watching. Go add to my watch list. Perry technology stock. So again, that one's down 5%, so I won't be interested in that one. Mercury, again, I won't be interested in that one. It's on its way down. Silver Corp. So I'm interested in that one. Again, great big green candle, up and up. So I'll add this one, add to watch list. And I'll Shake Shack's one that I know that I like. Like I spent a lot of time researching defensive stocks. And again, it was all the McDonald's and, it was just all, when people don't have the money to eat out at nice fancy restaurants, they, typically might take the family to the, let's say the more convenient fast food type joint. So it was down for the day, but I said I do know that it's normally a fairly resilient stock. You can see that these indicators are nicely spaced apart, but is definitely operating at above 70 type territory. So it's not one that I'm interested in trading straight away, but I might do something like what I'll do is I'll right click and I'll go add an alert on RSI, and I'll say when the RSI 14 is crossing, let's say the 65 type mark. So just when it comes back to a value type area, it'll send me an email or a pop-up. And so I'll click on create, and then I'll move on. Ego, again, looks pretty good volume coming through. So I'm going to go add to watch list. AG, another silver miner. Like silver and gold always seem to be popular. So again, looks like the green's about to break through the red, so I'll add him. Add to watch list. And again, if you've arguably you'd be patient and you'd say, well, if that's a resistance area there, you'd probably wait until it breaks and closes above it, and just to confirm that it's going to keep going that way. But it looks like it's at a reasonably good spot. And again, historically, it has been higher. So I often like to find stocks where they have had people in the past who for whatever reason, it might have been news, it could have been anything, but patterns do tend to repeat themselves. Again, you can see it's been much higher through here. So this has previously been a resistance area, this sort of spot here, and it's a long way between 11 and 16. So it might get back up there. So this is the sort of stock that I do like to look at, and might be keen on this one. I've added it. Yep, pod. Again, I can't remember where I looked at Pod, but I think it's an insulin type company. So, and anything with diabetes or insulin is always good. Omnipod, yeah, there you go. Insulin management, blah blah blah. $9 billion company. EBITDA is not that high because it's one of these sort of more health discovery type stocks. But you can see here that even after the bit of market volatility, it hasn't really come back down. So Pod, just for the sake of diversification from all my gold stocks, I'll add Pod. SPNS. Maybe I won't add that one. ENPH. The reason why I didn't add SPNS, I should say, is that see how these indicators here are pointing down. Like I like it when they're pointing up. So that one's pointing down, that one's pointing down. The price is in theory pointing down, even though these are up. So if my indicators are pointing down, then I tend to maybe wait out that stock unless like with some of these last ones, I've got an emotive connection to them. So you can see here, this one's pointing down, pointing down. But Enphase Energy is a stock that I like for whatever reason. So I'm going to add it, even though it contradicts what I just said. Alteryx. So again, you can see this one's more of a sharp downturn, sort of more of a sharp downturn. So I'll ignore that one for now. Apps, I'll ignore that one for now. Intelligent Systems Corp, I'll ignore that one for now. See, it's sharply pointing down, pointing down. FFHL, I don't even know what that is. And so this is an example of a stock. See how it's rocketed, like it's gone ballistic on some sort of a news announcement. So that's not the sort of stock that I'm looking for. I reckon this one will probably pull back, and then at that stage it might then become worthwhile trying to trade. But I think it's a plastic manufacturer from memory, like some sort of plastic packaging. Yeah, manufacturer distributes plastic film using stretch technology for food and bits and pieces. I'm pretty sure. Yeah, packaging of luxury items, cigarettes, alcohol, film for aluminium plating base, heat, sealable bags, any counterfeit film for food, medicine, cosmetics. So for whatever reason, they've gone nuts. But that's not the sort of stock that I'm looking for. I'm looking for the ones that are nice, consistently running, with their moving averages. DRDG. So again, great volume. Good little uptick on price, was up 10%. So I'll add him to my list. It's a watch list. Pays. Pays, no, I don't think I like it. Like, I do like payment type stocks like Visa, MasterCard, American Express. They're good, resilient type stocks as well, because they don't do anything. They don't produce anything. They literally just process transactions. So Pays, I'll give a miss. Luna, doesn't excite me. Red candle, pointing down, pointing down. Rada, it's got a green candle. Don't know what they do. Rada, let's have a quick look. Yeah, I don't know what they do. Defense, basically. I kind of think that any stock where they maybe are a defense contractor, especially to the US, American government doesn't care if there's a recession or depression. They'll just keep spending money. If it's money being spent on anything to do with the military, they'll just keep spending. So RADA could be interesting. So I don't know what's happened, but RADA is definitely one that I'll add to my watch list. RADA. And so I'll add that one. And so that's the end of the list. So that took a little bit longer, to go through those 28, but I'm just trying to give you as much transparency into what I look at. You might filter by sector. You might change these numbers here, which will give you, more or less stocks. You might add in, some people like PE, some people like PEG. You might add in, some of your extra indicators that you like to look at. But what I now do is you can see I've now got this list that sits here. This is my, Friday watch list. And then what I'll do is on Monday when the market opens, I literally open this list and I'll sort it by percentage change. And all I do is I target the stocks that are going up. So, when the market opens, in the first thing in the morning, you'll have crazy volatility. Stocks will go up and down. I typically wait until about half an hour after the market opens before I start to trade, just to get rid of some of that volatility and just to make sure which way the stocks are going, so they haven't been manipulated in the aftermarket trading. And so I'll literally have this as my short list of stocks because there's plenty there. And then whichever ones go up, I'll as they go up, I'll typically try and buy the ones where they're maybe up. If they're up, say around 2% for the day, then or for the morning, that kind of gives me that confirmation that they're going to continue going up. They're going to continue following this line nice and smoothly, and they're just going to keep ticking up, ticking up, ticking up. I'm not looking for the stocks. If it goes up 10%, I don't chase it. If it goes up, crazy amounts, I tend to ignore it. And I just look for the stocks that are up, 1.5%, 2%, 3%, because I think that, they're likely to keep continuing, just in that very nice, smooth, growth, type phase. So that's what I do. So I hope that's an easy thing for you to follow. And again, I always say this is just how I do it. All I'm trying to do is put the odds in my favor by buying stocks that seem to be going up. Buying stocks that seem to be on a consistent upward trajectory. And that's what I like to look at. I like to look at breakouts. So if I put my little line that sort of shows the area here, ideally when that stock goes above that $129.33 type mark, it's $129.35 at the moment, but when it ticks above that, there's a really good indication that it's likely to keep going. If I it's always, hindsight indicator is always a wonderful thing, but if I sort of said, well, around this area here, you can see that hit up here, couldn't get above it. It was at $119 mark, around dollar type marks often make it hard for stocks. There might be a little bit of resistance around, $130. But you can see that, once it broke above it and closed above it, then it did keep going. It came back a little bit because, again, it hit resistance, came back a little bit, and that now effectively becomes support, that sort of area. You can see here that, with the long tails on this stock, see how it didn't break below that tail, didn't break below that tail, didn't break below that tail. So, often what I'll do is I'll double click on that and I'll change it to green. And so that I consider as a support area. So, if the stock doesn't go above that and it does fall back down, then I'm hoping it'll only fall down to this area here. But I think there's a really good chance that, because it's got good volume and these indicators are pointing up, and the fact that it's gold, I think gold's going to go well for a bit. I think it'll probably break out and I think it'll keep going. And the other little tool that I like to use is I'll find this one here. And all this one here, all I do is I draw from this line down to this line here. And so see how that's roughly 6% back to that area there. And so then I think on this particular stock, I'll probably have a 7 or 8% stop loss. And so that way, if it does get rejected for whatever reason, then if it gets to here, then I'll have a market order that basically puts my stock into the market. And so for whatever reason, if it does come down through that, then I'll bail. I'll get out at market. I might not get out at that exact price. Like sometimes, your stop loss, if the price falls sharply, it might get me out at, I don't know, instead of $121, it might get me out at 118, 117, 116. But I don't care. I want out. If the stock is going the wrong way, I want out. And of course, if I've got a 6% stop loss on it, then what I'm hoping is that the stock will go up. It'll eventually keep ticking through here, and my stop loss will keep moving up and up and up. As the stock moves up, my 7 or 8% stop loss will move up with it. And then once it's up around 5 to 10%, then I'll move my stop loss to 10%. And so I'll give it a little bit more breathing room. But the other thing that you can do is there's this linear regression tool that I really like. I've put this in another video somewhere, but you can see that if I change this to, let's say, 90 days, because I always like to look at things over, roughly 3 months, just to, get a good view of, what the stock's been doing recently. So that's a little bit too long. So I'm going to change it to, say, 60 days. Let's see what it looks like. Okay, so for 60 days, you can see this is where it's broken out. So it started to run here, and you can see everywhere that it's gone within these two lines. And so then if I take my little tool again, and I click on, let's say, the top one here, it doesn't matter where you click on, just literally click on the line down to here. And so you can see that from the top of that line to the bottom of it, so that's roughly 7.5%. So no matter where this stock was over those last 60 days, if I'd had a trailing stop loss of around about 8%, I wouldn't have been stopped out anywhere. You can see that from that high point there to that low point there, if I get my little tool again and I go from that really high little red extended arrow there down to roughly there, see how it's still within 8%? So it means that, and I haven't drawn this accurately, but it means that, an 8% stop loss would have kept me in this trade all through this period. So, my whole goal is to, buy a stock, roughly when it's breaking out, when it's trending upwards, when these lines are running nice and parallel to each other, the price isn't doing anything crazy. And then I'll set a stop loss that, lets me, really try and keep within this channel. So that's probably a much longer video than I thought. I didn't mean to make it that long, but I'm just trying to give you an idea of, in a volatile market like it is right now, this is what I look for when I'm going through trying to work out what stocks to buy. I'll just do one last thing. I'll give you a very quick look at what I call my defensive US stocks list. And I don't necessarily know all of them, but see how these are stocks that typically, I spent ages. I went through Investopedia, and I went through Bloomberg, and I went through Yahoo, and I went through Warren Buffett stocks, and I went through a whole bunch of sites, and I said, what are traditionally defensive stocks? Because again, I'm looking for stocks where the market moves to. If the market's going to crap, where in the past, when we've had downturns in the past, where have people typically put their money? And so it's into stocks like these. So you can see on the Friday when everything went down, the market was down, 3%. Most of these stocks, were down, less than 1%. Some of these ones here were down a little bit more. McDonald's and Visa and Costco were down a little bit more, but most of these stocks, managed to stay up. So, rather than me going and buying 20 gold stocks, what I'll do is I'll probably put some of these ones in it as well. So, QSR's QSR, it's quick service retail, but who was it? I know the brands. Burger King. So QSR's Burger King, Popeyes, companies like that. So again, places where people spend money when they're a budget. IMKTA is a supermarket that's a little bit. It's basically a cheaper version of Walmart, from what I remember. Unilever, I think they're a big medical company, aren't they? No, fast moving consumer. Yeah, primary personal care. So if there's a depression or recession, people are still going to buy toothpaste and deodorants and oral care. They're still going to buy that sort of stuff. You're not going to stop using soap, whatever it is, because the market's gone to bunk. Same with your phone. People aren't going to stop using their mobile phone or their cell phone plans. They might try and reduce it a bit, but people are so wedded to their devices, they're not going to get rid of them. So AT&T might be a good one. I think this next one is Coke. Coke's just selling like nuts. This one's, I think, an energy provider, electricity provider. So again, you can see, they've just had this really consistent run, even though they were down after this bit of turmoil, left to right. They're good. You can't shut off all your power just because there's a recession. Colgate Palmolive, a little bit less of a good chart. Like, it's not as nice a chart, but that one probably isn't one that I'd trade at the moment. But people certainly said it's a fairly good recessionary type stock to hold. Walmart, any time there's something going on, people will typically look for someone like a Walmart to do their shopping at, as opposed to your higher end retail chains. Starbucks, no one's going to go without their coffee. They might pretend to cut back for a bit, but they don't do it for very long. Wings, another one of these fast food chains. Again, you can see that left to right, it's just had a very good run. Yum is all your pizzas, and I think pretty sure it's Pizza Hut and places like that. Maybe KFC, KFC, Pizza Hut, Taco Bell. So every time I go into a mall, like one of the really big supermarkets, these stores are always packed. All your specialty stores might be dead. They might all be really quiet, but every time you go past a KFC or a McDonald's or a Taco Bell, they're always got bucket loads of people in them. There's people in there always. So, people, they just keep ticking along. Procter and Gamble, again, personal type products. UHT, Universal Health, it's a REIT. So I think that these guys basically own things like hospitals and stuff like that, I think. Company invests in healthcare, so healthcare related facilities, including acute care hospitals, rehab hospitals. So again, just because there's a recession, you're not going to go to hospital, you're not going to go into rehab. So, again, they're a company that, I think I like the look of. Again, left to right looks pretty good. Kimberly Clark, again, one of these personal products, non-cyclical. So, you're going to keep spending your money on Kimberly Clark. McDonald's, I'm surprised McDonald's had a dip. I don't really know why they had a dip, but the other interesting thing is see how it comes up. For defensive mega cap stocks to buy now. So these articles will often give you a little bit of a clue, and I went through heaps of these. So I'm not quite sure why McDonald's is down, but it should have been one of these stocks that should have fared fairly well, but it didn't for whatever reason. Visa, they're down at the moment, but again, it's just one of these companies where everyone now pays. How many people pay cash for anything? It's now all credit card. You pay your bills online. You do your shopping with tapping your phone. So your Visas of the world, I think, are going to keep going. Costco, people still need to eat. Any sort of a big discount retailer, especially for food type products, is going to go well. Sam, this is a funny one. I don't know why I got this one, but someone said that some of the beer stocks go well in a recession. Maybe people stop drinking expensive wine and spirits and they switch to beer. But I put Sam in just for some random reason. And this is, I must have looked at this before, because you can see I've got a flat area and I've got a breakout area, and it certainly has popped above that. But I wouldn't trade it because you can see that the indicators are all pointing down. And MasterCard, you can basically choose between MasterCard and Visa. They're both very similar. In fact, if I click on Visa, you can see, up, 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 red line. MasterCard, exactly the same. Up, 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 dip, red line. So it doesn't matter which one of those two you hold. Interestingly, MasterCard was down a bit over 3%. Visa was only down over 2.7%. But these are just some other stocks that I have as my defensive USA ones, just to balance out the gold ones. But again, all I'll do is on Monday, I'll literally click on this one. I'll sort it by, which ones are green versus, which ones are red. And I go through the green ones and I look at the chart and I look at, how much they're up or down, and then I'll put in an order for them. But the ones, again, that I'll probably watch the most is this Watch Friday. And these are the ones you can see they've all gone up reasonably significantly based on, what happened on Friday. And so these are the ones that at the moment I have my eye on. I'll probably ignore the $129 one. I'll probably go for more of these, $60, $50, $20 type stocks. Anything under the sort of $50 type mark is probably better, just because I think they're more likely to, give me a 10 to 15% return over a couple of, over a month or a couple of months, than a stock that's, already $129, and even though it's performed really well, it's just this thing that I have. If I can buy a slightly cheaper stock, why not? So theoretically, that's up 62%. So it's done well. It has run very well. And then by comparison, if I do the same thing, I go from sort of where it started running up to here, and so again, roughly the same amount. So it doesn't really matter whether it's a small stock or a big stock. I just have this thing where I think a small stock's more likely to go from, let's say more likely to go from $5 to $10 than a $1,000 stock goes from 1,000 to 2,000. That's just me. Right, so that's definitely longer than I intended. So I hope you found that useful. Please, please, please do your own research. This is just me trying to show you how I trade. None of these are a buy at this stage. I'll literally wait till Monday just to see what direction they're going. The other thing with gold stocks is when the market does recover, these ones will start to come down, or gold stocks in general start to come down, which is why I've tried to pick these ones where you can see that, even though the market's been a bit up and down, these stocks have been consistently running nicely. So fingers crossed, and always set a stop loss. And, as always, if you're not confident in your own training, you want a bit more advice, go and talk to a local broker. It's much better to find someone who might be able to second guess what you're doing. I have a broker, so I've got about 8 different accounts. 7 of them are all traded with a broker, so I'll send him through a list of what I think I want to buy from a technical point of view, and he applies his fundamental knowledge across them, because he comes from more of an FA background, and he then says, "Yep, I agree with this one. I don't agree with that one." And if the both of us agree, then we buy it, and if both of us don't agree, then we don't. Likewise, he'll send me some fundamentally sound stocks, and I look at the chart and I say, well, it's not really where I want it to be, so let's pass on that one and move on to the next one. So I certainly recommend a broker. It's just good to have a second person. If you've got a lot of money in the market, it's good to have a second person who might be able to help give you a different view. And the honest answer, if you don't pay a lot of money for a broker, and it's a tax deduction anyway, so if you find the right person that help you trade, then it's always a win-win situation. So I'm very, very happy that I've got a guy who helps me, but at the same time I feel very comfortable in trying to pick stocks that I like. But it's just for some of these bigger superannuation type accounts that I look after for my family. I want to make sure there's a second eye that might see something that I don't. And he looks at it from a fundamental point of view. I look at it from a technical point of view, and so hopefully somewhere in the middle there's a good balance. Right, that better be it. I'd like if you like it. Bloody hell, 50 minutes. I'm terribly sorry about that. Click a like. Feel free to comment. But again, this is just how I trade, and I hope you found something useful out of all that. Thank you.